Cryptocurrency. An overview. Cryptocurrency is a type of digital or virtual currency that uses cryptography for security. Unlike traditional currencies issued by governments and central banks, cryptocurrencies operate on a technology called blockchain, which is a decentralized system spread across many computers nodes that manages and records transactions. Here are some key points to understand about cryptocurrency. 1. Decentralization asterisk. Traditional currencies, such as the dollar or euro, are centralized and regulated by governments and financial institutions. In contrast, cryptocurrencies are typically decentralized, meaning no central authority regulates or issues them. 2. Blockchain asterisk. This is the foundational technology behind most cryptocurrencies. A blockchain is a distributed ledger that records all transactions across a network of computers. Once information is added to the blockchain, it's extremely difficult to change or alter, adding security and transparency to transactions. 3. Cryptography asterisk. The security of cryptocurrency transactions is ensured using cryptographic techniques. This makes them secure and, in many cases, anonymous. 4. Popular cryptocurrencies asterisk. While there are thousands of cryptocurrencies in circulation, Bitcoin, introduced in 2009 by an anonymous entity known as Satoshi Nakamoto, is the most well-known. Other prominent examples include Ethereum, Ripple, XRP, Litecoin, and many others. 5. Mining asterisk. Some cryptocurrencies, like Bitcoin, are created through a process called mining. This involves using computer power to solve complex mathematical puzzles. Successful solving of these puzzles results in the creation, or mining, of a new block on the blockchain, and the miner is rewarded with a certain amount of cryptocurrency. 6. Use cases asterisk. Cryptocurrencies can be used for various purposes. Transactions asterisk. Many believe that cryptocurrencies can revolutionize the way we transact, offering faster and cheaper ways to send and receive money globally. Investments asterisk. Due to their volatile nature, cryptocurrencies have attracted investors hoping to profit from price fluctuations. Decentralized applications asterisk. Platforms like Ethereum allow developers to build applications on top of their blockchain. Private transactions asterisk. Cryptocurrencies like Monero and Zcash offer greater privacy and anonymity compared to others like Bitcoin. Tokenization of assets asterisk. Assets like real estate, art, or even company equity can be tokenized on the blockchain, allowing for fractional ownership and easier transferability. 7. Regulation and controversy asterisk. Cryptocurrencies have been subject to scrutiny, debates, and regulatory challenges. Concerns have been raised about their potential for facilitating illegal activities, their environmental impact, particularly in the case of energy-intensive mining processes, and their use in evading capital controls and taxes. 8. Wallets asterisk. For storing and managing cryptocurrencies, digital wallets are used. They can be hardware-based like USB devices, or software-based applications or online platforms. 9. Volatility asterisk. Cryptocurrencies are known for their price volatility. Prices can skyrocket, but they can also plummet. This has led to debates about their stability and suitability as a long-term investment. 10. Future outlook asterisk. As the technology matures, there's increasing interest in how blockchain and cryptocurrencies will influence sectors like finance, law, and beyond. Some believe it's a bubble, while others see it as the future of money. In conclusion, cryptocurrency is a dynamic and rapidly evolving field that merges technology, economics, and finance. It offers potential for a decentralized financial future, but it also comes with risks and challenges that stakeholders need to address.